lifetime ISAs, or as I like to call them, the government's apology for high housing prices. If you've ever wanted to save for a house or for retirement and get free money at the same time, well, lifetime ISAs are for you. But hold on, there is actually a catch to lifetime ISAs, so let's break it down. A lifetime ISA, or a LISA, it's like the government handing you 25% extra on your savings and going, here you are, you've saved some money, have some more. You can open one from the age of 18 to 39. If you're starting a bit late, too bad. You can save up to $4,000 a year, and the government will top that up with an extra $1,000 every year if you fill that $4,000. It's kind of like a money tree, but instead of watering it, you keep having to pay into it. You can only use your ISA for one of two things. One, and probably the most common use, is buying your first home, and the other is retiring without having to eat instant noodles every day. If you're buying a house, property must cost $450,000 or less. That's like a garage in London or a castle in Scotland. And then if you're retiring, you can get access to that money after the age of 60. So you can finally go golfing every day after waiting for 40 years. That all sounds too good to be true, and there are some catches. If you withdraw any money early for anything other than a house or retirement, you'll face a 25% penalty. This means you lose the government bonus and a chunk of the money that you've actually put in yourself. So if you are starting an ISA, you use it for one of those two reasons and you're happy for it to go there, or you're happy to lose that money. If you play by the rules, a lifetime ISA is an absolute no-brainer. Let's say you max it out every year for 10 years. That's $40,000 of your own money plus $10,000 from the government. Free money is always the best kind of money. Here's some quick tips as well to make the most of your LISA. One, and always the most important, is start early. The more bonuses you can rake in, the better. And don't wait until you're sort of 39 just to start, because you'll only get 1 year's allowance. Set savings goals. To hit the $4,000 you want, it's £333.33 a month to max out the allowance. For every pound you're putting in, you're getting 25p back. And don't forget when the deadlines are. The tax year ends on the 5th of April, so make sure you put the full $4,000 in well before that. Lifetime ISAs are a fantastic tool for first-time buyers and for future retirees. But remember the rules. You don't want to withdraw early unless you have to and or enjoy paying penalties. It's like Monopoly money. Play it smart and then you'll win big. So, what do you think? Opening an ISA a good option? I definitely think it is. It's worth noting that not all institutions actually offer lifetime ISAs, so it's worth shopping around. As more of the common sort of online trading platforms, they won't offer them. You're looking at large banks, smaller banks, and a couple of sort of specialist lenders. It's important to know that you can actually get stocks and shares ISAs as well. So if you're willing to risk that money by putting into some stocks or bonds, then you can actually maximize your returns rather than getting the 3-4% currently on offer from most of the banks. But always remember, with any stocks and shares ISA, your money can go up, but it can certainly go down too. All lifetime ISAs are covered by the financial compensation scheme as well, up to $85,000 per institution or $170 for joint accounts. So the extra money you get from the government is protected by the government. Going into the weeds a little bit now, there are a few little stipulations about the properties you can buy. The property you're purchasing has to be a maximum of $450,000 or less, and there are stipulations that go along with that. So the obvious things are you've got to be a UK resident. One sort of little caveat that I think is a very interesting thing, you need to have actually owned a LISA for at least 12 months to be actually able to use it. Otherwise, you will have to pay penalties. So it's an entire year and then you move on. So the best thing to do is make sure that you are actually using it just after the year ticks over. That way your entire bonus from the previous year is protected. If you're buying a property with somebody else, so most couples or people will be purchasing a property together, what happens with an ISA, and you each have to have one. So if you're planning to buy a home together, it is important to understand that there's no such thing as joint ISAs. They are literally individual savings accounts, and this one is a lifetime individual savings account. So you and your partner need to own separate ones, and here's how it works. So if you're a first-time buyer making a purchase with someone who has owned before, you can still open one and use it towards your home, but the partner can't. If you're both first-time buyers buying a property together costing $450,000 or less, you can both open them, so essentially doubling the bonus. So it's a real handy tip for you couples out there. One final tip that I think is really important with lifetime ISAs is do not withdraw that money yourself. If you do withdraw the money yourself, you actually lose all the bonuses, and that will count as a penalty. You need to get the LISA provider to actually transfer the money to your solicitor for the purchase. Do not withdraw the cash yourself. And on that note, hopefully this has helped you. If you've got any questions, do leave a comment below, and on to the next one. Thanks so much. You might need to cut back on some daily expenses, maybe one less Starbucks. Well, that's a bit cliche. Screw this Starbucks thing.